The South Korean cryptocurrency exchange Coinrail reported that it was hacked over the weekend, sparking a fall in Bitcoin amid renewed concerns about virtual security, or security rather, at virtual currency exchanges. Joining us now to discuss the vulnerability of Bitcoin exchange security is Ran Neu-Ner, who is the founder and CEO of Onchain Capital. And of course, he's not too unfamiliar to CNBC viewers, as he is the host of Crypto Trader. Ran, what's going on?
So another exchange, another week, another exchange getting hacked.
Yeah.
It looks like it is a very small hack. It was $31.5 million worth of tokens. It was taken from one of the biggest exchanges in the world, which is Bithumb. You know, like I've said in the past, we are in the beginning of creating an asset class which is called cryptocurrencies, and we're still building the infrastructure around it. Now, this asset class is not like a normal asset class. It's not like money or like shares where you can store them in a vault. This is a digital asset class. The advantage of a digital asset class is that you can move things around very quickly. The disadvantage is that it's all stored online, and unfortunately, we are still building the infrastructure to secure the cryptocurrencies to be as secure as normal assets. I always say this, it's quite funny, because if you think about it, banks get robbed every day and cash in transit heists happen every single day. There was a cash in transit heist that happened here in Joburg. Two of them happened yesterday.
Sure.
And it doesn't move the markets. And I think the same thing has started to happen in the crypto markets. If you look at Bitcoin, the Bitcoin price and the crypto prices haven't even been affected by this hack.
But Ran, you're sounding like you're saying that this is not a big deal.
It's not a big deal. And I'll explain to you again why. We are in the early stages of an asset class. I always say that crypto is like the internet was before there was a real browser. That's how early we are in the Bitcoin and cryptocurrency life cycle. So if you look at the exchanges that happened a while ago, the Mt. Gox exchange and the DAO exchange and the DAO hack, all those were very big exchange hacks and exchange robberies. And now we're building and building and building, and as we're building, security is getting tighter and tighter and tighter, and it's becoming much harder for the hackers to be able to rob the exchanges. That said, like with every industry, there are still some vulnerabilities.
Okay.
And that's what's happening.
So investors, how do they protect themselves against this vulnerability?
So the biggest rule is that you shouldn't keep your crypto assets on an exchange. Because if you think about it, an exchange stores a lot of money. It stores my money, your money, and everybody else's money. So you shouldn't keep your cryptocurrency on an exchange. An exchange should be used for exactly what we are talking about, which is exchanging. So if you want to swap your Bitcoin for Ethereum, or your Ethereum for Ethereum Classic, or your Bitcoin for US dollars, you put them onto an exchange, you complete the trade, and then you take your wallet off the exchange. Why? If someone is going to hack, they're not going to go and hack my wallet or your wallet, because there's not a lot of money in my wallet and there's not a lot of money in your wallet. So the amount of time and effort and energy that it would take them to hack our wallets is actually not worth the return that they'd make. But in an exchange, where everybody is putting all their tokens into an exchange, then there's a lot of money there. And so the hackers can spend a lot of resources and a lot of time trying to rob the exchanges. It's like, if you want to take it to real life comparisons, it's like comparing taking your purse versus robbing a bank. To rob your purse, there's not such a big return, but so to rob a bank, you may want to spend a lot of time and a lot of effort and a lot of energy robbing the bank.
So then where do I keep my virtual money purse?
So you keep your virtual money purse either in an online wallet or in what they call a cold storage wallet, which is almost like a memory stick that you put into your laptop, and you transfer your coins onto the memory stick, and then you take it out and then you store that somewhere safe where it can't get robbed.
Okay. Ran, a quick last question. I mean, we're halfway through the year. Bitcoin in the past 6 months has gone from $20,000 to around 6,000 something. What's the outlook like for the rest of the year?
So we have been in a bear market. 2018 has been a terrible year for Bitcoin. I think one of the second worst period for Bitcoin that we've had since the launch of Bitcoin. If you zoom out a little bit, you see that, you know, if you look at it on a 12-month basis, Bitcoin is still up 6x from where it was 12 months ago. The market is up probably 15, 20x from where it was the same time last year. Yes, we had an overheated run in October, November, December, where the market went up to crazy highs that were unsubstantiated. And I think now what we're experiencing is this correction that is bringing it down to normality.
So these are normal levels at around 6,000 or so.
The market dictates what is normal, and the market says that 6,000 or 7,000 is where it is.
And has that 6,000 or 7,000 priced in sort of increased regulatory pressure? So we're not going to see any more reaction from Bitcoin when more regulators come on and clamp on
So the regulators are actually being more favorable towards Bitcoin. The US SEC came out last week and said Bitcoin is not a security. They came out and they said Ethereum is not a security. So what we can see is that they're slowly working their way down this asset class to get to a point where they're saying, you know what, this is actually a bona fide asset class, and we're legalizing it and we're legislating it accordingly.
Well, Ran, let's leave it there. That was Ran Neu-Ner, founder and CEO of Onchain Capital.